please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
But there goes the bell, and the Nifty Bank is the only one that's in the red. The Nifty is flat actually. Started with a 12-point gain, 10.0, now only 2 points. So it's flat as flat can get. The Sensex as well just up about 20, 30 points. And the mid-caps are doing a little better, but they started with a 0.5% gain. And now again, it's only 1/3%. So the early morning highs are not held, but let's wait and see whether it's going to be huge profit taking after that mammoth Friday rally, or it's only nibbling. Tata Steel starts with decent gains since the expected has happened. 2.6%, 2.7 higher. Bajaj Auto sales numbers have got a thumbs up from the street, 2.3% higher. Tata Motors up 1.6, Maruti Suzuki. Basically, auto stocks are getting, they are the top 3 of the top 5 gainers. BP surprisingly is higher. We will have to wait and see, probably because the expectation is that the Trump phone call to Saudi Arabia could yield something, but at least they're not losing ground. Titan has gained further after all those brokerage reports giving them a thumbs up and perhaps the overhang of selling over. And the tech stocks have done well. Infosys, Tech Mahindra, all of them doing reasonably well. The big boys, the big two, which always do well, the Bajaj twins are continuing to do well. Vedanta, they've got a cut in the weightage given by Credit Suisse in their basket, as well, of course, victim of the commodity cycle and other issues in India as well. Vedanta is down a bit. It's been falling continuously. Coal India, the street not quite impressed with the dispatch and sales numbers. NTPC, GAIL, ITC, Bharti, ONGC bring up the red for the index. All those stocks are down about 1%, and now the Sensex and Nifty have moved marginally into the red, 13 points down on the Nifty. Mid-caps just barely holding green.
Yes, in fact, the mid-cap index, a tad bit in the green. The market breadth is good actually, 900 stocks on the advancing side right now. By the way, Bajaj Auto is your big Nifty gainer. It's the biggest Nifty gainer right now, up more than about 2%. It's reported record high three-wheeler sales, so that whole pocket is firing very well, 66% growth there. In the broader markets, just take a look at Titan. There's been an earnings upgrade coming in from Morgan Stanley, so Titan is in focus this morning, up more than 1% right now. A couple of other stocks, Ashok Leyland, the numbers are not out, but ahead of the numbers, the stock is in the green. Actually, the commercial vehicle pack has done quite well this time. You can see it in Tata Motors numbers, as well as Eicher Motors CV numbers have looked very good. So Ashok Leyland in anticipation is moving with some strength. A couple of more stocks. The graphite stocks have been doing well this last week or so. Graphite India is up another 5% IDBI Bank is up another 4% or so. And a couple of these technology stocks, Tech Mahindra is gaining quite a bit of ground this morning. On the downside though, just take a look at some of them. Nalco is down 2.5%. In fact, metals are correcting. Nalco, Vedanta are all in the red. GAIL, Reliance from the frontliners as well, and some PSU banks, Andhra Bank, etc. are in the red. Otherwise, it's a flat opening for the market. By the way, Bata has hit a new high once again today. That was Ashwini's call. So that one is now at 860 or so, a new high there. Britannia, it has Britannia for company. That one too has hit a new high in trade.
Yeah, bad start, Sonia, actually, for the market. So Bank Nifty in particular has seen a weak start. That's down about 75 points. This would go down as a really weak start, perhaps an indication of where things could go from here. The mid-cap index almost losing all the gains already. 1.5:1 is what we have on advanced decline at this point in time. Keep an eye on both Tata Steel and Tata Motors, of course. From the opening, they're slipping a bit. Let's see how they go from here. Ashwini, your thoughts on market opening and any interesting trade?
Both Tata Steel and Ashok Leyland have opened well, so autos could move on the upside. Meanwhile, banks are breaking down, almost breaking down below Friday's low. So that's where, a trending move may be possible for the day. So that's a good shot right now. But overall, the market has opened fairly weak, and the banks could lead the Nifty not to make further gains beyond what it did on Friday. So my sense is that still range bound to down. IT could move up. Meanwhile, banks could move lower. Again, those 52-week high stocks, some of them are doing well. So auto and metal on the upside and banks on the downside. That's the way it seems to be playing out.
Okay. Sudarshan, Any trade now? I mean, would a short position crop up on the Nifty at any point?
No, the Nifty should be a long position if it dips significantly, somewhere around 10,630 to 640. That's a dip we want to buy. Otherwise, there is a short position in Bank Nifty apparently. I think Ashwini has already spoken about it. That may be possible, but there are two buying opportunities for intraday traders. One is M&M and the other is UPL, which is actually now suggesting that that's a low in place there. So two stocks to buy, and Nifty only when there's a sharp dip, we buy that.
Okay. Ashwini, just thoughts on Sun TV? That's opened with a bit of a gap up.
See, Sun TV is in a downtrend. Now, given the way the market is acting, anything that's in a downtrend, you need to get short on. I don't think you want to get into stocks where there is no particular news and you are chasing the high, because remember, Friday was an up day. If you don't get follow through, people who went long on Friday, they are likely to get trapped.
Okay, well, Mitesh, anything on your radar now?
Yeah, Lata, few stocks. I think on the positive side, Tata Steel, the gap of opening should see some kind of follow through. Once the day's high is crossed, I think you will see more momentum coming over there. Bharat Forge from oversold levels is giving a good reversal, so that could be a buy. Two sales calls as well. I think Eicher Motors has opened up and then immediately declined by about 500 points, and it does look like the structure is quite weak. So with today's high as the stop loss, that could be an interesting shorting idea. While on the banking side, I think Ashwini has spoken about Bank Nifty, but HDFC Bank is just on the verge of getting into negative mode on the intraday charts. So another 5-7 point decline, I think that could possibly see some kind of a slightly stronger correction, and we could see a pullback to about levels of 2050, 2045 on the downside.
Okay, by the way, the market is falling some more. So the Bank Nifty is actually dragging down about 0.4%. And even from the frontliners, ITC, L&T, Reliance are all under pressure. Ashwini, what would the big call for the day be?
See, big call remains that banks are likely to come off, and the reason is HDFC Bank. It rallied, against the Bank Nifty for many days. Now there's, some significant profit booking that's coming here. So maybe autos, Tata Steel, you buy into, and banks you sell into, and overall on balance the Nifty is likely to remain flat, possibly hold 10,500 thereabouts. But if HDFC Bank picks up selling on the downside, then the market could turn fairly strongly.
Okay. Thank you, gentlemen. The mighty HDFC Bank is kind of making a double top, but well, it would be really too early to say that that is kind of the last man standing. And on that point, I want to come back to you, Udayan, on how you parse the global scenario. There are people over the weekend who have been talking very worried about the EM outflows. But separately today, the Credit Suisse morning note says that second half they expect a global growth momentum uptick. Just how would you put all these pieces together from an Indian investor point of view?
These people will know better, Lata, the people that you're talking about, Credit Suisse, etc. From my limited perspective, the news flow and the price action don't look encouraging. I'm not a great student of global markets, but the price action is looking bad. If you look at emerging market currencies, not looking encouraging. If you look at EM versus US performance, not looking good. The only two charts which are looking promising, frankly, are crude oil and the dollar index. That is never good news for emerging markets. The news flow is not great. Emerging market earnings upgrades are not happening. Crude oil is moving higher. The yuan chart is also looking fairly shaky, and trade war news flow is picking up. None of this is a great combination. The US bond deal remains elevated, and clearly liquidity will be lower for EMs compared to what we've seen in the past. This is not, if you look at the history, is not a good combination for EM performance, and this time it's complicated by the trade war situation. So if you look at the price action and you look at the news flow and the fact that people are not bearish on EMs. If you talk to 10 fund managers, at least 7 will tell you this is just a temporary blip, it will pass, and EMs will continue to do well. This is exactly what you do not want to hear. You want to hear saying, we sold a lot of EMs over the last 3 months, and we are very bearish on EMs now given what the news flow is. That has not happened yet. So putting all of it together, I would say I would be very cautious about EMs, and that's part of the reason why one should be cautious about our own market as well.
Okay, then fair enough. Thanks a lot for joining us today, and of course we'll keep having conversation with you through the year. It looks like perhaps a bit of a tough year. Let's invite our market master then. Pramod Gubi, Head of Equities at Ambit Capital, is with us. Pramod, good morning. So, your analysis of what's happening in the broader market right now, of course, we want to put it in context of 2017, where the market had 48% gains, and there would be some reversion to mean, but the kind of fall that we have seen in the mid and small caps.
Yeah, absolutely right. I think it needs to be seen in that context. After 2017, I guess we had to expect some sort of mean reversion, consolidation in the markets, and in fact, valuations had reached a level where it was getting very difficult to look at any fresh investment opportunities. So obviously some sort of profit booking was on the table, but I guess it's coincided with the sort of trend that we've seen in global markets in terms of both the tightening liquidity and the trade wars, all contributing towards a significant appreciation in the dollar, which is never good for emerging markets, and the resulting capital outflows have meant that Indian consolidation has taken a bit sharper trend, at least at the mid and small cap level. Alongside that, we've seen the sort of repositioning of the local funds away from small and mid caps to large caps. That's added another leg to the fall in mid and small caps. So I guess we are seeing that trend continue as these global factors remain negative catalyst going forward, and the move towards relatively defensive positions, sort of accentuating that pain in the mid and small cap space. So although on a stock specific basis you are seeing some sort of value emerging, but I think given the sort of momentum on the downside, we may not have seen the bottom in that space. So I guess that trend is likely to continue, where we'll see broadly stable trends at the large cap index level, but continued pain in the small and mid cap space.
Okay, good morning, Pramod. Good to have you with us. Well, just a word, mid-cap is kind of still holding out. So after the first rush of selling, the selling appears to have stopped across the board, and the mid-cap marginally in the green. May not mean much, but we'll come back to it in a bit. Pramod, what are you hearing about emerging markets? I mean, I'm repeating this to every guest I've invited, because a lot of people talking about outflows and rather heavy outflows from EMs. And yet at the same time, the global economic growth momentum is not really breaking, at least not in the US. So what should we expect from the global standpoint? Can it give us a very nasty shock like a yuan depreciation or something like that?
I think there are two different forces at play here. So one is about the liquidity tightening. I think we've spoken about the Fed roll-off of the QE. So U.S. Treasuries not being refinanced anymore, and that pace is only increasing, likely to touch about $50 billion a month by October. So that means that the sort of easy liquidity we had flowing into capital markets in general, and particularly risk assets like emerging markets, and that's reversing. That'll have its own impact in terms of liquidity available for EMs, and also the impact on the currency markets. The second set of factors is around the trade wars that we're seeing, which has seen significant impact on some of the emerging market index heavyweights such as China, Korea, and Taiwan, which are significant exporters, particularly in the area of technology. Those clearly have borne the double brunt of both the currency as well as the potential impact of trade wars on some of the heavyweight companies in these economies. So we need to see the impact on EMs in these two lights. The second factor is not such a big deal for India, given we don't have that much of an export or trade exposure in general. But we do get exposed to that if the currency markets continue to take a beating, and that feeds through imports into our own domestic inflation story. So the impact on fundamentals is through that route rather than any direct exposure to trade wars. or in fact even our capital account exposure is relatively lower. Whatever outflows we had to see, we've pretty much seen that, maybe a little more to go. But unlike some of our other emerging market peers with significantly larger dollar-denominated debt, we are relatively immune on that front as well. But having said that, I think the feeling is that emerging markets are likely to see further outflows, and we'll have to take our own share of outflows from that perspective.
Okay. Pramod, hi, good morning. I know your entire tone has been very somber with respect to the markets, but I did catch on to one statement you made where you said that, you're seeing value emerge in selective stocks. So let me just, sort of flesh that out from you. What kind of stocks are you seeing some potential in right now? Is it more to do with the consumption space where already a lot of money is being made? Or do you think some of the beaten down sectors now offer value?
I think the themes continue to remain the same in terms of top-down approaches. I don't think I meant a top-down investing when I was talking about value emerging. This is a case where we're talking about the broader small and mid-cap index, where by its very nature, stock selection would mean a bottom-up approach, and that means that this value could emerge in any particular sector. So value doesn't necessarily mean that the top-down themes have to align with valuations there. From a thematic perspective, I think those themes remain the same. Consumption in an election year is always a good space in terms of visibility of growth. And add to it the fact that some of the companies have very strong brands to deal with the sort of input cost inflation that we've seen. That should still be in good areas. Secondly, private sector financials, I think in a rising interest rate regime, private sector banks with strong access to CASA deposits, low cost of funds, should be able to see spreads and margins rising and driving earnings growth as well. And lastly, I think IT, not least because of the potential currency depreciation that could happen even from here, but also a general recovery in global growth, IT demand, and the sort of investments that the sector has made in terms of the new technology should be in good space. But otherwise, value-wise, I think it will remain a bottom-up story for the longer-term investor who can see value now and perhaps stay through any potential pain that could continue to linger on over the short term at least.
Okay, by the way, metals are down quite a bit now. Nalco is down 2.5%, Vedanta, Jindal Steel and Power. So just keep an eye on some of these names. And there's a bit of a decline that you're seeing from here. Pramod, so has a top for the year been made, you reckon, on the index itself? We may not go down too much because the stocks which are supporting the market, but in terms of this market scaling new highs, you reckon there are enough triggers?
No, in fact, like I've been saying, both globally as well as locally, the triggers are more likely to the downside, both in terms of technical flows as well as the fundamentals. I know, we've been saying that, the local economy is clearly on a recovery mode as far as growth is concerned, but pretty much every other parameter is looking worrying, be it the current account deficit. A healthy demand also has its own challenges in terms of the fact that much of the demand is being met through imports rather than any sort of local supply side response, and that's in a scenario where emerging market currencies are generally under pressure is not particularly great, because that import growth is feeding through into domestic inflation, and that'll flow through into interest rates as well. And again, in an election year, fiscal deficit is also a thing to watch out for, which is not looking great, particularly given where crude and the rupee are. A combination of both can put more pressure on that. So local macroeconomic triggers also look negative. Emerging market flows, trade wars, negative. Potential sources of political uncertainty as we see some of the state elections coming through. Again, not particularly great from a volatility standpoint. So all these things put together, I guess on balance, the risks are more to the downside than otherwise.
All right, Pramod Gubi, we'll leave it at that. We will have, of course, a lot of cues coming in when the first of the, poll expectations start coming in. That would come in a couple of months, and then, of course, we'll have a better idea of how the polity is shaping up. Thank you very much indeed for joining us. The trouble with macros is you can make an equally strong case. I mean, we are seeing earnings growth finally. We have seen consumption kicking up. We are seeing a bit of capital investment coming in. We have an inflation targeting central bank, which will, take good care of the macros. So one can make an equally strong case that the downside should logically be protected. But that debate for another day. For the moment, one of the macros that's hurting one set of stocks are crude prices, back at near $79 a barrel, which means significant pressure on the margins for paint companies, a segment that's been doing well because of the consumption story. Will they be forced to hike prices or take a hit on margins? For all these questions, and for, of course, the ubiquitous GST question, H.M. Bharuka, Vice Chairman and Managing Director of Kansai Nerolac, joins us. Good morning, Mr. Bharuka. Thank you very much for joining us. First up, just lay out the demand scenario for us. Is it looking good because consumption has picked up across the board? So is the scenario giving you the confidence that even if raw material is expensive, you can push on the prices upper?
Good morning, Lata, Sonia and Anuj. I think you put it rightly. Yes, scenario for the top line is looking good, and I think we have been always saying that paint industry is going to have a double-digit growth. So that growth story continues, and we hope in this election year, when the government spends more on the rural economy, the consumption goes up further. And if we hope GST rates are reduced further, then this will also give a boost to the paint industry. So I think overall we see a lot of positivity as far as volume growth is concerned, but concern do remain on the bottom line.
Okay, Mr. Bharuka, good morning. That actually was my next question, because there was quite a bit of pressure on your margins in FY18. You think that would be under further pressure, or it could improve from here?
Anuj, very difficult to answer this question for a simple reason, because we are seeing a lot of volatility in the crude oil prices, the rupee getting depreciated, and with geopolitical situation, with interest rate rising in US, and fiscal deficit perhaps going to become higher. So all these are complications which actually points out toward a very volatile situation. So it makes it difficult for the industry like us when we deal with B2B. How do we approach our customers? And we have to be very, very fair to our customer. We do understand our costs have gone up, we need to pass it on to them. But at the same time, how do we approach them? And we have a contract with our customer. So we don't look at our customer on a very short-term perspective. We look at them from a long-term perspective. Some of the customers, right from the day one, we have been supplying to them. So for us, those relationships are more important than, protecting a short-term profit. So I think if you look from a long-term horizon, there would be a possibility in short term we may have a dip in profit, but in the long horizon, I think if we are able to protect our top line, we should be able to get back our margin.
So when you say double-digit growth outlook, just coming back to the first statement you made, I mean, double-digit could be 10%, it could be 20%. So are you looking at the higher end? I mean, will it be closer to 20%, given that the last few quarters have looked good?
Sonia, I think 20% is too high as of now to expect. But even if we get mid double-digit growth between that, I think that should be a good double-digit growth, given the scenario of last year and the turmoil which everyone is facing. So I think in that scenario, double-digit growth, volume growth, if we get even 12 to 14%, especially on the decorative side, I think that should be a good double-digit growth. On the industrial side, of course, we expect some slowdown in the automotive sector, and we feel that growth should be actually a single-digit growth, not a double-digit growth.
Why do you say that, Mr. Bharuka? Because we just got the June auto numbers. They looked very strong. I mean, reasonably strong. You sensing this momentum can't continue?
I think we are looking, June numbers year on year, where last year GST was introduced and the base was very, very low. But if you look on month from May to June, actually there is almost 12 to 15% down compared to the May. And my personal feeling is, auto number would be slightly under consolidation phase going forward, except for two-wheeler, which is because of the rural economy may do well. But otherwise, there's a possibility there could be some slowdown in the auto sector. That is my personal feeling. However, I may be wrong, and I will be happy if I am wrong.
Okay, well, I wanted to ask you about the GST scenario, sir. What is the distribution arm? I mean, there was a bit of disruption for especially FMCG companies, maybe not paints. Has that disruption of distribution gotten sorted out? But more importantly, has it given you any extra market share because informal sector is not able to cope with GST?
I think GST, you rightly said, paint industry was not much affected except at the distribution level where there were a lot of confusion for the dealer, the administration problem. But I think credit goes to the government. They handled it very well, and from a monthly return they have made it to a quarterly return, and now they are talking about yearly return. And the way I am seeing government moving on this administration side, it gives me a lot of confidence. You will have to wait for one more year to get it stabilized, and when the invoice matching starts, and that is where the benefit of, from unorganized to organized sector would come in. As of now, I don't see much benefit coming in, but maybe part of unorganized sector is becoming a formalized economy, and which is a good for the entire country. So right now the collection which you are seeing about 95,000 crores, I mean, we expect it to go up to about 20 to 25%, but not in this year, maybe next year.
Okay, you had spoken about the big growth in the decorative paint segment the last time we spoke to you. From this 12% market share, I think, that you're currently sitting at, how much do you think your market share could increase in decorative paints over the next 1 to 2 years?
So it's difficult for me to speak from a market share perspective because I don't know how other players are doing and how market shares are calculated by the players. So it is difficult for me to say. So as far as we are concerned, we just look at how are we doing ourselves, and we feel we are doing pretty well. Now, how much increase in market share that is leading to, I think we have a very low base, and even if 2% extra growth I get, it is not going to lead much change in the market share, except that our ratio of decorative and industrial become more favorable, which will help us in protecting our bottom line.
Okay. Well, let me just come back to that one point you said about auto sales numbers in June, and you correctly pointing out that it's not as good as May. This could also be seasonal. May has more number of working days. June gets disrupted by rain. I mean, you would know better. Just give us a little more color on how you are looking at growth. I mean, in terms of demand and the automotive sector.
I think on a passenger vehicle, we look at a growth of about 5 to 7%, 5% on a lower side, 7% on a higher side, and two-wheeler could be about 10 to 12%. And given the push in the rural economy, provided monsoon is very good, then we can see a tractor sale continue to grow very well. And commercial vehicle segment may come slightly under pressure this time, so because it's, I think, base has become slightly better. So overall, if you put apple and oranges together, we look at 8 to 9% growth on the auto side.
All right. Mr. Burka, it's always a pleasure speaking with you. Thank you very much for assessing so many pieces for us, the GST piece, the margin piece, and giving us your idea of how growth is headed in the automotive space. Well, that's the word from Kansai Nerulak. With that, let's focus once again to the banking space. This is the first ever media interview given by Bank of Baroda's chairman, Ravi Venkateshan. Remember, he's a man of many splendid talent, has been chairman at Infosys, before that Cummins, Volvo, Microsoft, so brings a lot of experience to the table. He assessed for us the main problems that he sees in the PSU banks as an outsider, and he's provided some solutions. Hear him out.
I think the first thing is to fix governance, because if you can't fix governance, you really are pouring money down that leaky pipe.
And for fixing governance, you need to reduce government stake, you think?
Look, I'll come to that. So the first job is you have to empower the boards. The board has to have the ability to appoint others with the right expertise. It has to have the power to appoint the CEO, the executive directors, shape strategy, give them their targets, hold them accountable. This is just the most foundational aspect of governance, and we don't yet have that.
Compared to you as a chairman of the Infosys board and of the, say, Cummins board, if you compare your position here, you think that you're not empowered enough.
It's not just me as a non-executive chairman. The board itself is not empowered to do these things, and I think that is just foundational. I think the second one is to address the talent issue, because I think You can have all the strategies and ambition and the opportunity. If you don't have the right people and the right roles, you're not going to get very far. And here what we have, as I said, other than State Bank, you do not have a systematic ability to attract the best or a competent person for the role of the MD, EDs, etc., and give them enough tenure. You don't have the ability to recruit out from outside laterally, even into specialist positions like technology or risk, etc.
You can't appoint them?
No, there is great difficulty in the system. So now we are working with the government as a group of public sector bank chairmen to try and get a framework that would allow this. So these, I think, are just the two most fundamental improvements without which I cannot see progress being made. If there's a third one, it would be to eliminate fear in the system. You know, again, the Nayak...
It's a newfound fear,
It is not a newfound fear. It was addressed in the Nayak Committee report in several pages. I actually, before I took this and had the courage to take it, I read the report and actually met Mr. Nayak. And there are several pages on the fear of CBI's, you know...
Yes, the 4 Cs, yes.
Yeah, CVC and all that. I think the recent events have conspired to amplify that fear by at least 2 orders of magnitude. And it's not just management which is now scared, even non-executive directors are getting pretty apprehensive. Now, this fear, it's really paradoxical. On one hand, all this system of accountability doesn't seem to slow down frauds and bad lending decisions. And on the other hand, it creates paralysis. So I think this is incredibly dangerous and debilitating.
Well, all right, that's the word coming in there. But just look at escorts. The numbers are looking really good this time around. The total growth for escorts has come in at 73% at 9983 units. But that's a total number. If you look at only the domestic number, it's 9758, which compares to 8087 in the month of May, 6097 in the month of April, and 11,000 in the month of March. So it's a really good run rate that we've seen. Month on month, the numbers have grown quite well compared to the previous few months. So looking pretty good for escorts. In fact, this month has been a really strong month for a lot of automakers. Bajaj Auto is one of the top Nifty gainers this morning, as the company has posted strong sales in June, record high 3-wheeler sales, and it's actually the stellar export growth that has really propelled the run rate. 4.04 lakh units overall is what they've done. Rajiv Bajaj, the MD of Bajaj Auto, joins us on the phone line to talk about that. Hi Rajiv, good morning. I want to first start by talking about exports, because after 2 very, very challenging years, finally the export market has started to pick up for the sector on the whole. You think it's just looking optimistic from here, and it could move northwards in the months to come?
It's certainly looking very good, Sonia. Yes, the last 2 years were difficult, both in terms of key markets and also in terms of where the rupee was for the last 2 years. And repeatedly, Ravi Kumar said on your channel that the test of a good strategy is that you can stay with it in the tough times. And I'm glad we did. We continued to persevere. We launched new products. We opened up new markets. And look at what has happened. Let me give you some detail, for example. I mean, we stuck it out in Nigeria, which was very, very difficult for about 18 months. And today, Nigeria has rewarded us with the highest growth in terms of motorcycle exports. For the first quarter last year, it was about 39,000 vehicles totally. This time, it is 104,000 vehicles. So that's been outstanding. Let me give you an example on the 3-wheeler side. 3 new markets last year, Cambodia, Iraq, and Ghana together, represented only 2,000 3-wheelers for us in the first quarter. Together, they now represent 10,000 vehicles for us. So the growth is on both motorcycles and 3-wheelers. It is across markets. It is in mature markets as well as in new markets. So all of this would augur well for the future. Having said that, with exports, we've learned that every day is a new day. So for now, I can only say that in the first quarter, we've recorded a 31% growth overall in exports at about 540,000 vehicles. This is our highest ever quarterly exports in the history of the company. If you were to simply extrapolate it, it suggests that we should be hitting something like 2 million at the end of the year. Whether we do that or not, only time will tell, but for now it looks good.
Okay. Rajiv, hi, good morning. But, you know, of course, Bajaj Auto exports is the biggest trigger. Is this number coming at the same historical margins, or have you had to sort of take some kind of hit on that to focus more on the top line number or on the volume number?
I cannot give you a definitive answer to that because I don't know myself. But what I can tell you is what will help the numbers will be the fact that we are exporting many more Pulsars and three-wheelers than we did before. For example, in this first quarter, year-on-year change, the three-wheelers in exports are up by as much as 69%. So that's very good for us. I know Pulsar is also up handsomely, but I don't have the number with me right now. On the other hand, as I just said, if Nigeria is going to perform as it is doing, clearly the Boxer over there doesn't have the same margins as a Pulsar or a three-wheeler does. So I don't know where that balance rests right now. In terms of the rupee, obviously it's been very good in the first quarter. We've generally been 68 plus, so that's another positive. Having said that, there is a raw material pressure in terms of prices. It's really quite vicious right now. So again, how much did we lose on material costs and how much did we gain on the rupee? I don't have that number right now.
Okay. Good morning, Rajiv. Good to have you with us. And again, a sore point that you aren't coming on camera. At least the photograph here is clean shaven, so I would assume that was your complaint last time.
You know, Lata, they say when your work speaks for itself, don't interrupt. So when the results are so good, why do you need to see me?
No, I don't want to praise you on air. But let me come to the domestic sales, which are really praiseworthy. I mean, ultimately, that is the whoop and woof of existence as well. Domestic sales at 234,000. They seem to be a kind of a near-term high that you have scaled. If I looked at all the monthly numbers, you know, the month before was 224, the month before was 229. Are you seeing something very good in the demand scenario, or are you claiming better market share?
I think the short answer is it is better market share, especially with motorcycles. Just to make the point that both on domestic motorcycles and domestic three-wheelers, we have our highest quarterly sales ever. As far as three-wheelers go, let me start with that because that's simpler. You know, when you have something like 80% share in the market, it's impossible to improve on that. So it is actually the expansion of the market, primarily by the opening up of the permits, that has helped us. Having said that, our highest growth has come actually not from our traditional petrol and alternate fuel segment, where we have grown by 62% year-on-year, quarter-to-quarter, which is outstanding. But it has come in the diesel segment, where we have grown almost 3 times from 7,000 to 20,000. And on the cargo segment, where also we are not the market leader, but we have grown by 76%. So that's the good news. There are segments where we were weaker. Thanks to new products, we have done exceptionally well. On the motorcycles, the good news is that for the quarter, we have an improvement of 40% growth, which is, again, I think, way ahead of industry growth. So we are certainly gaining share there. I don't know by how much because I don't have competition data. And, what is, again, remarkable there is how all the brands are performing. Quarter on quarter compared to last year, the CT is up 76%, Platina 35%, Discover over 100%, and Pulsar over 50%. So, we have multiple brands doing very well right now, and that is what the growth itself owes itself to.
So I wanted some more thoughts on what's happening with the commuter segment, because the street is very excited about, the impending launches there. What can we expect over the next 6 to 12 months? And you said you increased your domestic market share. Where does it stand at currently?
I just finished saying, Sonia, I don't know what the market share is because I don't have competition data. Maybe in another 2 days we would know that.
Okay.
As far as the commuter space is concerned, yes, there is so much headroom for growth, and this has been our Achilles heel for a long time. I think we finally found the right positions for our brands there. CT competing at one end of that commuter market, the Platina doing very well right in the middle of it, and the Discover coming in again, although admittedly the base for Discover is small, but having said that, it's playing its role at the higher end of that spectrum. So I think finally, although we are again, nowhere compared to Hero in that segment, but I think, as I just relayed the numbers, the growth is very strong. and hopefully we can keep this going. Of course, we need more product intervention, which will keep happening through the year, and we need more sales intervention, which we have just initiated. For example, today we have a sales promotion put into place right on the first working day of July. So I think everything is working together in a aligned fashion for us, and that is why, of course, for the month we grew by close to, I think, 86% in domestic motorcycles, but that's an aberration because of the low base last year.
Okay.
But 40% growth for the quarter, we are very happy with.
Rajiv, can't let you go without giving us, without you giving us your latest take on the Dominar versus Royal Enfield battle. I mean, Royal Enfield are almost 75,000 sales. Disappointed a few people because it is 500 short of that 75,000. Where do you see this battle, and what are you doing anything more for the Dominar?
Well, we participate in that segment with not just the Dominar, but with the KTM and with the higher-end Pulsars as well. So, as opposed to 75,000 for Royal Enfield, our sales stand at about 10,000 if you look at all the brands that are there in that price range. I think what is happening is Bajaj and KTM and Yamaha are gaining ground, albeit slowly. And I think, as I said last time when we spoke last month, that we have to keep doing what is right for us. So we have to do what is right for Dominar, we have to do what is right for KTM, and that's going to help us in all markets. I mean, I've been making this point that today in the export markets, if you look at our exports at around 1,500 versus 2,000 for Royal Enfield, that's very close in a short period of time. But in the domestic market, where they are such a tall brand, it's going to take a long time to overcome them. And I don't want to make or to repeat the mistake of Dominar versus Royal Enfield, the mistake we made with 10 years back with Discover versus Hero, where you stray from your position and try to play somebody else's game. I mean, it's taken us 10 years to recover from that on the commuter segment, so we have to be careful not to repeat that mistake.
Okay, just one final question before I let you go. I heard you mention sales promotions from July. What is that exactly? I mean, you had been giving discounts on, you cut the CT100 prices recently as well. So what would these sales promotions be, and on which brands?
We cut the CT100 price in response to the main competitor cutting prices. I have to make that point. We didn't draw first blood. In terms of sales promotion, we have, typically this monsoon period of July and August is difficult for rural sales. So it is not uncommon for every manufacturer to step forward with something. So we have a promotion in place that combines some typical sweeteners on finance with warranty and some insurance-free kind of offer. It varies from brand to brand. It's not a huge discount, but it helps us to keep the numbers going for these 2 months until September comes, and then we are all in a better period.
Okay, a very quick and a very large thank you to you, Rajiv Bajaj. We are almost breaking rules on commercial breaks. Getting into a break and coming back quickly.